Welcome to Lesson 1, Overview of Taxation. Taxation is a fundamental aspect of governance and economics, providing governments with the revenue necessary to fund public services, infrastructure, and social programs. It is a tool used to manage economies, redistribute wealth, and influence behavior through various policies. In this lesson, we will cover a number of areas. First, we will explore the definition of taxation. Second, the purposes of taxation. Third, historical evolution of taxation. And fourth, principles of good taxation. At the end of this lesson, you will be able to 1. Understand the meaning and importance of taxation. 2. Give at least 5 purposes of taxation. And 3. Understand how taxation has transformed through various periods in time. Let's start with a simple question. What is taxation? Taxation is the process through which governments impose financial charges or levies on individuals, businesses, and other entities to generate revenue for public expenditure. These charges come in many forms, such as income taxes, sales taxes, property taxes, and corporate taxes. The essence of taxation is about creating a collective resource, funded by residents and businesses, to benefit society as a whole. Now, why is taxation so important? Let's break it down into 5 key purposes. First, taxes generate revenue to fund essential services like national defense, infrastructure, and social programs. Second, taxation helps redistribute wealth, reducing economic inequality through progressive systems. Third, taxes regulate economic behavior, such as discouraging tobacco use with high taxes or incentivizing renewable energy with tax breaks. Fourth, taxes support social policies, for example, by funding education or housing initiatives. Finally, taxation helps stabilize the economy by influencing inflation, employment, and growth. To fully appreciate taxation, we need to look back in time. Taxation has been around for thousands of years, adapting to the needs and complexities of different societies. We are going to look at 5 periods and how taxation was shaped around them. They include ancient civilization, Roman Empire, medieval Europe, early modern period, and last, the Industrial Revolution and modern times. In ancient Mesopotamia, people paid taxes in goods and labor to support public works. The Egyptians taxed land and harvests to fund their grand projects. During the Roman Empire, a sophisticated tax system funded military expansions and infrastructure. Let's fast forward to medieval Europe, where taxes were often collected in goods by feudal lords. The early modern period saw monarchs imposing trade and income taxes to fund their ambitions. By the 19th century, the Industrial Revolution transformed economies, and modern income taxes emerged as a key revenue source. We have seen how taxes help to shape the various periods in time and how the nature and use of taxes have evolved. However, in order for taxes to be of greater significance, it is equally important to understand the principles behind taxation and how it may impact individuals on varying basis. When we think about designing fair and effective tax systems, we don't have to start from scratch. The foundations were laid centuries ago by the Scottish economist Adam Smith in his groundbreaking book, The Wealth of Nations, 1776. Smith outlined 4 timeless principles of good taxation that continue to guide modern tax policies. Let's break them down. The first principle is fairness, equity. Smith believed that taxation should align with the taxpayer's ability to pay. This means those who earn more should contribute more, but in a way that doesn't overlook personal or family needs. Fairness ensures that taxes don't place an excessive burden on individuals or households. The second principle is certainty. Taxation shouldn't feel like a guessing game. Smith stressed that taxpayers should clearly know what they owe, why they owe it, and when they need to pay it. Clear, predictable tax systems build trust and help taxpayers plan better for their financial obligations. The third principle is convenience. Nobody likes a complicated process, and Smith understood that. He advocated for tax systems that are simple and convenient, making it as easy as possible for taxpayers to comply. Whether it's paying taxes or filing returns, the system should work with taxpayers, not against them. The fourth and final principle is efficiency. Efficiency is a key component to achieving success in anything. The cost of collecting taxes shouldn't exceed the revenue they generate. Beyond that, the process of taxation should avoid disrupting the economy or distorting how resources are used. In simple terms, tax administration should be smooth, cost-effective, and not overly intrusive. Now that we have covered the definition, purpose, historical evolution, and principles of good taxation, let us look at some key takeaways. Taxation is more than just a financial obligation. It plays a pivotal role in economic governance and societal development. Taxation serves a number of purposes, including funding public services, reducing inequity, influences behavior, and fosters economic stability. Taxation has transformed through various periods in time and has shaped the world today, and will continue to do so in the near and distant future. Effective modern taxation systems are guided by four basic principles: fairness, certainty, convenience, and efficiency. See you in the next lesson.